Hey, hi everyone. Welcome to another video in our hedge fund series. So today we are going to discuss about Steve Cohen and his hedge fund SSC Capital and its fund's performance, the major milestones this fund has, and also the education background and professional background of Steve Cohen and the black edge this company possessed and how it brought down the company and led to convictions of few key people in the firm and how a new firm got formed after SSC getting winded up by Steve Cohen and yeah, what happened to that case and of basically the black edge in hedge fund or insider trading in hedge fund. So we will go through this today and yeah. So Steve Cohen, he's a hedge fund manager, and he was born in 1956 in Great Neck, New York. His education was a degree in economics from Wharton School at the University of Pennsylvania, and his early career began in Gruntel and Company, and he joined as a junior trader there. And he quickly rose to manage a $75 million portfolio and a team of six traders. Okay, Steve Cohen actually was very good at the probability thing, and he was also very good at identifying trades where there is very less risk and high potential of profit, and he was able to even assimilate the information when computers were not there, and you know uh, get a context about a particular stock and basically estimate a probable outcome or the direction that particular stock will take. And he was right most of the times. Only few times he was wrong. So that's what he is. So because of that, he was able to get a lot of money. He had some tried poker also during his college days, and he was very good at it. He made good money in poker also, and yeah, but he's as a junior trader, his main thing was assimilating the data and getting a context, and then using that context to take a most probable trade where you are where your probability of success is most of the times you're successful, well few times you lose, but there you lose less, but when you win, you win big, and your probability is also very high. So that's what it is. So he was a very good trader, and that's why 75 million portfolio has been given to him, and he had a team of six traders. Yeah, and yeah, so this Gruntel and company has got mourned off because of some trades that they have taken, and one of the Black Swan event has basically wiped that entire Gruntel company. And then what Steve Cohen has done is he has founded his own firm called SSC Capital Advisors, and in 1992 with $10 million of his own funds and $10 million from outside investors. He grew it by 2009 and to managing approximately 14 billion in assets, and he was known for exceptional returns. It's some reports indicating annual returns upwards of 70% during peak years. Okay, yeah. Then we'll discuss about the black edge. So black edge is basically there are three types of edge: white edge, where you research about the information that's available publicly and use some technical indicators, fundamentals, valuations, analysis, and whatnot, basically, and then form a view, and you basically get either it right or wrong based on that. So that's a white edge. Gray edge is in between, so you get some information which is public as well as some information which is in a gray area, and then you trade on it. And black edges, insider information. Basically, you get insider information and you trade on it, and which is illegal in US and in many countries. So there you get the information beforehand, and from the people who are working in the firm. So you have an edge because you know the future beforehand because of some people who are working there, right? So this black edge refers to material or non-public information, and this is used for trading advantages. Okay, So the investigation of SSA Capital between 2010 and 2013 revealed that it was scrutinized for insider trading. And key individuals is Matthew Mortoma, who is a SSC portfolio manager, was convicted in 2014 for insider trading related to pharmaceutical stocks. And Michael Steinberg, who is also a senior SSC executive, was convicted for insider trading involving Dell and Nvidia stocks. Okay. Legal outcomes: SSE in 2013 pleaded guilty to insider trading charges and agreed to pay 1.8 billion in penalties. Steve Cohen was not criminally charged. He in 2016 settled a civil case with SEC, agreeing to a 2-year ban for managing outside money. Okay. Then he came back and he formed the 7.72 Asset Management in 2014 as a family office to manage Cohen's personal wealth. He reopened it to external investors in 2018 after the SEC ban expired. Current status is it's managing 35 billion in assets. Okay. The notable examples of insider trading in hedge funds is Rajaratnam, a Galleon group. He was convicted in 2011 for insider trading, sentenced to 11 years in prison. Matthew Martoma, SSC Capital, convicted in insider trading, sentenced to 9 years in prison. Michael Steinberg, convicted in 2013, sentenced to 3.5 years in prison. Okay. So that is the black edge, the insider trading, and those are the examples. And this is specifically related to SSC. But yeah, what is the hedge fund strategy that SSC uses? What is its trading style? So after forming is now 72.72, basically it operates like a mini firm, like a firms within a firm, and hundreds of portfolio managers. They have their own strategy and risk management, and they trade those strategies. And the frequent trading happens often in a short term, and they use the strategies called market neutral strategies or long short strategies, which are the core strategies to neutralize market risk by balancing long and short positions. We discussed about this strategies yesterday itself. Quantitative edge, heavy investment they do in data science and quantitative tools. So this is the trading style of now 0.72 post SSE. And now they are focusing on fundamental long short equity only and global macros and systemic quant strategies. And they were heavily invested in AI, artificial intelligence, satellite data, credit card spending data, all gray edge tools basically, and legal alternative data sources. Institutional compliance today 72.72 has extensive compliance structure to prevent insider trading. Okay. So as I told you, this is what black edge is, and black edge is confidential, non-public information obtained illegally and used for trading profit. And what has brought SSC down is this black edge itself has brought SSC down. Analysts were reportedly encouraged to get the edge, leading some to blur ethical lines. Basically, in case of Martoma case, what happened is Alzheimer drug trials were running on, and they knew that that drug is not going to is not going to is not basically performing well, or it's not really curing the disease. And they got that information from an insider who is the doctor who was testing that. And yeah, that basically they changed their position after that from a long to short, and this saved them 275 million in losses. But there was no evidence. SEC charges lacked evidence to directly convict Cohen, but multiple SEC employees were convicted. Firm paid 1.8 billion in penalties, and SEC was shut down to outside investors. Cohen was never directly convicted. No evidence was there that he has received that black edge, and or he encouraged this aggressive research. The civil case settled without admitting guilt, accepting a 2-year ban from managing outside money. And he avoided criminal charges through legal defense. I hired the best legal guys. Okay. Reinvention is now 0.72. Is initially a form is a family office. It has $35 billion under management. It's now it's more performance driven. It has a significant stake in Robinhood, Melvin Capital bailout. Also, it did during GameStop short squeeze in 2021. Yeah, so if you see this are the famous cases of the black edge, basically SSC Capital, Matthew Martoma, Bytech, and Michael Steinberg, Dell, Nvidia. Galian Rajaratnam multiple tech stocks, Tiger Asia, Chinese banks, Bill Hong. Okay, yeah. What are the lessons from black edge era is now compliance is king basically. Lack of rigorous controls can collapse even the most profitable hedge funds. Information has boundaries, so legal alternative data gray edge is fine, but black edge crosses the line basically. And culture matters. Aggressive performance incentives can breed rule bending behavior, and reputation risk is real. SSE was known for its performance but became infamous due to this scandal. Okay, so that is what is the discussion we had today. Hedge fund SSC Capital, very famous. Steve Cohen, a very successful trader, and he formed this. He made it achieve a lot of money, but again, this black edge was used by some employees in the company, which has caused it to fall. And again, but they came back and again reinvented the company, and now they are using gray edge and quantitative tools and more traditional techniques like the long shot and market neutral strategies to get profits, and they're running the firm as a firm of firms. So portfolio manager is responsible for his own portfolio and profit and risk management. So that's the video for today, guys, on SSC Capital Hedge Fund. Thanks everyone for joining the call. Have a nice day. Bye.